Hey, how's it going, guys? Thank you for joining me on this week's episode of This Way, The Real Deal. Man, I got to get that right. One of these days, I'm going to get it right. It's on my left. So this week, we're going to talk about interest rates. It's pretty relevant because it's all over the news. Well, in the real estate news, interest rates have dropped again. They're the lowest they've been in over a year, which is great. I mean, especially if you're refinancing a house or if you're a seller that you're looking to cash out on the equity that you made and you're looking to make a new purchase. From my experience in the last year, that was one of the biggest things that was holding back sellers from purchasing a house was they were able to lock in such a great rate when they purchased their house. And even though they were making a ton of money on the house that they had, to sell it and then get into a higher interest rate, just it just does something with you, with your psyche. Like you just don't want to get into a higher interest rate. I'm not going to guarantee it, but I'm like 99% sure that rates are probably lower than what you purchased your house at. So definitely something to consider if you guys are in the market to sell a house and then you guys are wanting to look at upgrading, because then you can get your equity, put a big down payment in, and then obviously your new mortgage won't be that high. Now, for first-time homeowners or for just people that are purchasing a house, what I want to do is I want to show you the difference this is actually going to make on your mortgage payment. Because I would say between now and a year ago, around this time, rates were about 0.625 to 0.75% difference. So we're talking about a 0.75%, which doesn't sound like a lot, but the monthly payment it makes is a pretty big deal. So let me go ahead and show you guys what I'm talking about here. All right, so right here I have a mortgage calculator that's simulating a house. The house that you guys were seeing earlier, that's why I had it flashing through, because it's 215,000. So when I tab over back to my other camera view, you guys can see it again. It's a great house, 215K. It's located on 67th Avenue in Olive, so great community too. It's going for 215,000, right? So with previous interest rates, what they were about a year ago, this is taking somebody coming up with their own down payment. So this is not down payment assistance. This is you coming in with your 3.5%. And this is also with a pretty good credit score. We're talking 700 plus. But let me just give you an example, because obviously that difference in percentage translates to even if you have a 640 credit score, right? There's still a difference in rates between last year and this year. I'm just using this comparison with somebody that has about a 700 and some change credit score, providing their own down payment. So we're looking at a house that's 215,000, putting your $7,500 down. Last year, this particular house, once again, no HOA, you're paying $1,323, which on its own honestly isn't too bad. That's a pretty good mortgage on this house that you guys are seeing. But let's see what happens when we drop that rate to what current rates are going for in that same situation, same type of buyer. So if we reduce that to 4%, your monthly payment drops almost $100 a month. So $1,247 right now going rates for that house. So, I mean, that's a pretty big deal, especially if you're very cost conscious about your monthly payments. To some people, they say, hey, what the heck, it's $100. But to most people out there, $100 is $100. So to be able to get this house that you guys are seeing back here, $100 cheaper just because the interest rates are less, I mean, that's huge. It's not like you're getting a house that's, less expensive. I mean, the house is still the same price, but just gives you a general idea of the impacts that interest rates make on your mortgage. So definitely something to consider if you guys are in the market to buy or sell a home. Let's run that same scenario with down payment assistance, because it's still not that much of a difference. So let's run the same scenario that we're looking at right now with down payment assistance. So this means that you're getting your down payment covered through one of the down payment programs. So same house, 215,000. Current interest rates right now with down payment assistance is 5.375. Same situation though. Last year, this same exact program was pushing like 6%. So you're still getting the benefit of the lower interest rates for down payment programs. It's not just people with premium credit. It's just for throughout the board. So whenever interest rates decrease or increase, down payment assistance programs follow that trend. So this same house, you have the option, if you don't want to come up with your down payment, you're going to pay a little bit more per month. You're going to pay about $150, $170 more per month. But because down payment assistance hires a higher interest rate, you're still going to get a great deal. So you're going to save $7,500. So you might be the type of person that's like, hey, if I could take advantage of a down payment program and save my $7,500 and put it in my pocket or buy some furniture, do some stuff with it, take a slightly higher monthly payment. And then let's say you're able to qualify for one of those programs where you don't pay private mortgage insurance. Let's just remove PMI here. So that same house, 1280. So you're back to what the rates are with premium credit, putting your own down payment. That kind of shows you, why that program is a great benefit. So just in general, down payment assistance programs, you're looking at about $1,400 a month. Putting your own down payment, you're looking at about $1,220 a month, $1,230 a month. And then using one of the down payment programs where you don't have PMI, you're looking at about $1,280 a month. Anyway, so I'm super excited about it, obviously, but you guys should too. If you guys know anybody that has a house, even if they're not looking to buy or sell, have them refinance. Give me a call. I'll set you guys up with a great lender because they can get into a good rate. If you're a seller that's looking to sell because now you get a great rate and you can take advantage of your equity, do it. And of course, if you're a first-time homeowner, rates are super low. Take advantage of that. All right, guys. Well, thanks for joining me on this week's episode. You guys have a great day and take care.